Go back even just 1 year and barely anyone in the world knew what Blackrock was, but today we all know about this monster. We've all heard about how Blackrock own almost 10% of every company embroiled in the military-industrial complex. We've all seen Blackrock's CEO Larry Fink mingle with global head of states and every billionaire you can imagine, and we've all read Blackrock's plan to profit hugely off the back of the Ukraine war. But today our topic hits even closer to home because we're literally talking about our homes. We're talking about the housing market, the massive problems it's currently seeing, and how looming behind this growing crisis, none other than Blackrock and others are pulling the strings once more, and there's nothing we can do about it. This has been going on for a long time, but the results are only just being discovered. This crash isn't just a run-of-the-mill market cycle, it's an orchestrated ploy to drive the average man out of ownership of their homes and to commodify the places we live. But before we get into this video, here's a quick shout out to the Daily Upside for partnering with us on this video. Check out the link in the description to sign up for their free newsletter. Now straight away, these aren't new allegations, and over the last couple of years, many people have stated how worried they are about the housing market, and in particular, how much power institutional firms like Blackrock seem to have, and this actually started to reach the legacy media, who did end up reporting on it, though they weren't happy about it. It reached a point where outrage started to brew, so Blackrock themselves actually put out the following statement: "We want to make perfectly clear, Blackrock is not buying individual houses in the United States." Great, so the matter is settled then, and this video doesn't have anything to talk about, right? Well, unfortunately not. Just a couple of lines down and we see that Blackrock do participate in the US real estate market, and combined they are investing approximately $120 billion into the US residential market. Well, that doesn't sound great that they said they aren't buying up any individual houses, but they are buying up $120 billion worth of homes in the market anyway, so how is this even the case? While the legacy media was more than happy to take that headline at face value and tell us that everything is okay and there's nothing to worry about, the entire article is incredibly vague, and that is by design. In the fine print, Blackrock admits that they are buying up multifamily properties, apartment complexes, and other residential real estate, which is where we're left to assume that $120 billion is going. So Blackrock are buying up duplexes, they're buying up triplexes, and they are buying apartments and apartment complexes, and they're buying up other residential real estate, which must refer to mobile homes and other smaller categories of homes, but it's okay because they're not buying up individual houses, as if that's the only type of home that matters, and pricing out those buying apartments or trailer homes is just a-okay. Blackrock are trying to deceive us with a nice title that puts our fears to bed, while in the very same publication admitting that they're putting $120 billion into homes that just happen to not have a private garden, as if there's no problem here at all. But there's also the fact that Blackrock said they aren't buying up individual houses in the US, which would give them plausible deniability if they're caught buying up lots of houses all at once, which is exactly what other institutional behemoths are doing. We're now at a point where there's a new crisis emerging every month, whether it's a new Cold War with China, a housing crash with shadowy global elites pulling the strings, or another escalation of the war in Ukraine. And one of the fundamental problems of this is that our media organizations have been captured by those with poor intentions. We all get told that Blackrock is one of the most powerful institutions in the world, but we can't even begin to imagine the extent of control they hold over every type of media that we see today on TV, or even online in some cases, and that's why independent journalism like what we see on YouTube every day is so important, and no more so than today. 2022 was a very difficult year for businesses, for individuals, even just for investors, with asset prices dropping and inflation remaining far higher than we'd like. And to make matters even worse, it's getting very difficult to find unbiased news sources in the finance world, which makes investing that much harder. Thankfully though, I have the Daily Upside to help guide me through this turbulent cycle. The Daily Upside is a totally free daily financial newsletter written by a team of investment bankers, scholars, and journalists who are unhappy with legacy media. It's quickly drawn the attention of many investors, myself included, and now is read by almost 1 million business-minded people every morning. The Daily Upside delivers the most important news that every investor needs to know, and they also go in depth on specific pieces as well. Just last week, they published this piece covering a brand new ETF that allows you to copy the trades of politicians like Nancy Pelosi and her infamous husband. We're only a month into 2023, but it's already looking like it's going to be a very turbulent year for investors, and it is more important than ever to be equipped with unbiased news sources like the Daily Upside. As someone who looks to deliver analytical, insightful, and unbiased news, I can't recommend the Daily Upside enough. It's just one email sent out to you every morning, and I've personally been reading it for over a year now. So if you want to be better clued up on the markets tomorrow, then sign up to the Daily Upside today using the link down below in the description. Again, that's the Daily Upside with the link down below in the description. Now, over a year ago, a home builder put together a development of 124 homes in Texas, increasing the supply of homes in the area, providing people with housing and helping to alleviate the pressure in the housing market with this new supply. But in the end, there was a bidding war over the homes, but it's not what you think. This wasn't a bidding war between people or families, and this wasn't a bidding war for an individual property. This was a bidding war between institutions and for every single home in the development altogether. In the end, a company called Fundrise, worth $5 billion, bought all 124 homes before they even reached the market for normal people, and in the process, they made it nigh on impossible for anybody else to buy a home for themselves. Now, this was literally an ideal situation for the home builders. They didn't have to give away 4% of the final sale price to realtors. They didn't have to wait for 124 separate families to pick out their homes and send over their deposits. And they didn't even have to hope and pray that all the mortgage applications were approved either, because Fundrise simply steamrolled the entire process. And then, as a cherry on top, Fundrise ended up overpaying for the homes by $32 million, literally doubling what the homes would usually have sold for if they'd gone to individuals. It is quite literally impossible for a family to compete against this kind of act, and it's become so unpopular because we see this happening more and more often. Now, of course, we have Blackstone, an incredibly similar company started by Schwartzman, who used to work with Larry Fink, and they're also a financial behemoth, being one of the largest property owners in the entire world, with almost $1 trillion in assets under management and well over $300 billion in property. When it comes to Blackstone, they don't even pretend that they aren't dominating the housing market like Blackrock though, with one of their spin-off companies, Invitation Homes, buying up 90% of all homes in some zip codes in Atlanta throughout the 2010s, to the point where they currently own 12,500 homes in that single city. And of course, as they're an institution, they're able to get incredibly cheap financing, averaging just 1.4% for their loans, whereas most people would have been buying at rates of 3 to 4%. This allows them to overpay by up to $20,000 for every home they buy, allowing them to easily outbid any normal person. It reached such a point of frenzy that by mid-2022, Blackstone decided to finally leave the single-family home market after dominating it for a decade, just 2 months away from the absolute peak in home prices, managing to time the market perfectly, or more likely, actually changing the market itself. It's clear that these institutions aren't buying up all the homes, but they are buying up the most important ones, and they're poised to make billions when the housing market crashes at the exact same time as everyone else in the country finds themselves out of pocket and out of their homes as well. The housing market crash that we've been warned about is actually already here, you probably just don't know it yet. According to Redfin, the average home in Sacramento has fallen 17% over 7 months. Prices in San Jose have fallen over 20% over that same time period. Prices in Miami are down 7% over the last 3 months, and in Las Vegas, they've fallen by 13% already. The crash is actually here, that much is clear, but the important thing is how the crash will affect these monstrous institutions, because it isn't in the same way it'll affect you and I. When the housing market changes for normal people, everything changes overnight. Interest rates getting hiked makes it nigh on impossible for someone to buy a home at the same price they could have afforded a year prior, and that means the number of potential buyers for each home craters. Therefore, so does the buying pressure, which is one of the fundamental reasons home prices fall. For those who already own a home, if their mortgage is on a variable rate, then their monthly payments go up, which is essentially what led to the housing crash that started in 2006, but today most people are on fixed rate mortgages. No problem then, right? Well, wrong. Home prices are determined by active participants in the market, not those with a nice low mortgage that can stay put for 20 years, and those actively buying or selling have to use current interest rates, meaning affordability comes crashing down. With the recession starting to peak around the corner as well, ordinary people don't even get a chance to buy while prices are low because interest rates have shot up, meaning monthly payments are just as high as they've always been. But ordinary people are also the ones who get hurt during a recession, meaning they lose their jobs or their savings, so the prospect of buying homes on the cheap gets even more unlikely. And all the while, these institutions are barely impacted by falling prices at all, or the recession for that matter. The perfect example of this is Blackstone and their $125 billion real estate investment trust, which has been thriving for years. But as prices have been falling, their investors have been running for the fire escape, trying to take their money with them. Blackstone, though, aren't bothered by this at all because they have it written into their contracts that they don't need to give these people their money back if they don't want to, and that's exactly what has happened over recent months. Withdrawal requests for their fund have been too high, so Blackstone are just simply saying no, you can't have your money back, you'll have to wait a few years for the market to recover, allowing us to weather this storm and come out the other side even stronger. No individual in the world is given that opportunity. If we can't pay our mortgages, we lose our homes, but Blackstone lose nothing. In fact, Blackstone and other institutional players who also operate like this stand to benefit from this crash. After 2 or 3 years of falling home prices when the recession is at its worst and no individual can buy a home anymore, Blackstone will simply walk in and buy everything up because they'll have all the cash in the world and there's nothing we can do about it. They'll buy your home at a foreclosure, they'll buy it on the open market, they'll buy it from your bank, and they'll do it for pennies on the dollar, well aware that in 10 years' time prices would have shot back up again and they'll make billions. And here's where it gets seriously sinister, because the question has to be asked, is this all by design? Was this the plan all along? These institutional buyers like Blackstone and Zillow bought up homes like it was candy with the cheapest debt in the world, and they bid well over asking prices time and time again, forcing the market up in a frenzy. Then, altogether, they stopped buying homes almost at the exact same time, and suddenly all this buying demand dried up, the housing boom turned into a housing bust over just a few months, and these monstrous companies either managed to time the top perfectly, or maybe they actually created the top. Maybe it's the very action of these companies pulling out of the market that caused it to turn bearish, and then it will be these very same companies that manage to profit while the rest of us flounder. Whether or not this was the intention of these corporations, no one can say, but it's looking increasingly likely that this will be the outcome. That ordinary people will suffer and financial behemoths will prosper. The simple facts are that BlackRock have been buying up people's homes for years. The exact same can be said for Blackstone, for Fundrise, and for hundreds of other hedge funds, banks, and institutions. And now they've all at the same time decided the market is no longer for them, right as it's reached its peak. It's not a nice thought that our homes are being manipulated for profit by companies that are more closely intertwined with our governments than any before in history, but it's very important that we're aware of what's actually going on, even if it isn't nice. So I'm going to ask you to subscribe to the channel and to join our Discord Stoic Markets so I can keep in touch, and I'd like to give one last thank you to the Daily Upside for making this video possible. Make sure to go and check out the Daily Upside using the link down below in the description, or if you want to see more about how the housing market's crashing and crucially why, then watch this video here.